A, the representation is so low, and B, the perception was opposite of what the data is telling us.
In India, at least, I've seen a very neutral view. They don't consider being a female founder as a factor.
Foreign return nuance, I think, is starting to change, and it's refreshing to see that, right?
So it's good to see that balanced experience was valued more eventually.
Thank you, Abhishek, for doing this with us. The First Cheque Report in 2024 that we've done, Jungle Ventures and Tracxn. It's been an incredible 3 to 4 months. I think first off, I want to thank you and your team for the support. I think the quality of data, the quality of collaboration, and I hope output has been incredible. I think the idea for today's session was to unpack some of that with you. I think you are an old hand in this ecosystem. You've been an investor, you've been a founder, you've raised all the rounds that all the founders are trying to raise nowadays, and you've taken this company public. So I think there's a lot that we can get from this session. But maybe to start, let me do a quick 30-second introduction. Jungle is a India and Southeast Asia focused venture firm that was started in 2012. We have about 1 billion in AUM. We're a generalist firm. We invest from pre-seed to Series B, anywhere from $1 million to 15 or 20 million. And our first check or pre-seed seed strategy, which we publicly launched last year, is focused on primarily backing second-time entrepreneurs or deep domain operators. We sort of use the stage not as a top of the funnel. They're all very, very high conviction, thesis-driven investments, and we play a very, very active role during the company building process. I think you already know some of this, but I thought it would be good to start with that intro. Would love it if you could do a similar introduction, but a little bit more about your own journey as well, and then we can kind of go into some specifics.
Rishab, it was absolutely honor to partner with Jungle for the first report. And I was very, very pleasantly surprised by what insights we eventually found from the data. And sitting in this ecosystem, so I joined Accel in 2008. So for 16 years, I've seen this ecosystem very closely, and I was personally pleasantly surprised with kind of insights we eventually found on the founder background. And some of them were discoveries even for me. So I'll give you a quick intro about me and then also about Tracxn. So me and Neha started this company 11 years back. We were both VCs and come from tech backgrounds. And I was with Accel between 2008 to 10. I spent 3 years with them. This was very early days of internet in India. And I was fortunate to be part of the team which invested in Flipkart in the early days. Then I also personally invested in delivery. So I was the first angel there. And before that, I did tech for 5 years. I was with Amazon and Yahoo in their tech teams in Bangalore. And I did my undergrad from IIT Kanpur. I was top 100 JEE ranker in 98. And so I come from Marwadi family. So business was always there as a part of narrative. And in 2010, me and Neha started exchanging notes. She was at Sequoia, now Peak 15 at that time. And we started, so there's one conversation where a company met me. And the next day she met Neha. And we were both incidentally worked on figuring out if there are other competitors in that market. And it was sort of a light bulb moment saying that, oh, we are both doing the same work. Maybe somebody should just do it centrally. And because we are both programmers, we figured out that a technology can also play a big role. So there is 2 levels of efficiencies. One, you do it centrally and 50 people can use it. Secondly, by technology, we can at least cut down the time by 80%. So we thought there is something here. And we kept speaking about this idea for 2-3 years. And eventually at some stage, we realized that just like public-private markets, there are also public market investors. And they have luxury of a lot of platforms. And many of them do more than $1 billion in revenue. So we realized that there's a large company to build. And that's when we started working on it full time. We were incubated in Lightspeed US office. A lot of people don't realize that Neha was in Stanford at that time. They have a summer program where some of the kids of Stanford and Harvard maybe, so they give out, it's like an internship program in entrepreneurship. So they pay you $10,000 to $20,000 per founder and they ask you to spend summer. And the idea is to sort of go through that experience, not necessarily create a company out of it. And most people actually go to school back, finish their second year and then continue. In our case, I was available full time. So I started working on it full time. Neha continued in second year and then she was doing sales at that time. And then we came back to India. Early in 2013, we met Kittu from NEA. So they had given us a term sheet and he mentioned in a passing that now you should decide if you are going to build this company to sell or if you're going to build this company for IPO. Asked him, what do you mean? And he said that, look, if you're building for M&A, you have to focus on product because distribution will be bought brought by the guy who will buy. So you need to really solve the problem and build an exceptional product, and they will bring the distribution. But if you're going to go and list yourself, you need to build revenue, and you need to focus on cost structures as well. And at that time, we decided to register the company in India and make it headquarters. We realized that this is an India IPO story, and we didn't want to
2013.
13, yeah. So we closed our US entity and we moved everything here, and India became the headquarters, and then we started. So IPO was always on the cards. And that's a brief journey about us and the company. And since it was something born out of our personal experience, we really enjoyed building this company because we were the end customers. So in many cases, we related to what they would need, how they would need it. And very few times where we got a thesis wrong. So that really helps if you are the end customer. That's a brief story about us.
No, thank you. And before we jump into some specifics on the report, I want to kind of pick up on a few things you mentioned. So, I mean, like, how do you foresee in 2013 that this is an IPO story? The only listed company in India at that time was InfoEdge.
Correct.
Maybe Make My Trip was listed on NASDAQ. There was, the best multiples for technology stocks in the world was always the US. So, how did you have that kind of...
Correct. So, I knew companies go public when I was like maybe 10, 12 years old. Because when you grow up in a business family or where the dinner table conversation is around these economics, I have heard it many times that India likes cash flow stories. So if you have a heavy profit business, they will be valued more in India. And when I invested in delivery, Sahil also spoke about this whole IPO thing with me once. So it was always in back of my mind. And when we looked at public market data companies in US, they generate an insane amount of cash flow.
Yeah.
So once when ZoomInfo went public, there was a narrative in SaaStr saying that all SaaS companies should step aside because data companies is where the real margins are. They had highest gross margins. Public market data companies produce today almost 13 billion of free cash every year. So when we realized that public data companies produce insane amount of cash flows in long run, that's when we said India values those companies more. We are going to be based out of India. 90% of our headcount most likely will be in India. So that will be more valued here. And there was some little bit of nationalism in the back of my mind, but that is always secondary when you're running a business. You do what is best for the business. And turned out being in India would be a great advantage. So that really was a sweetener.
Amazing. You said you were the first angel in delivery.
Right.
Another now publicly listed company.
Correct.
Just can you put some light on that moment when they came to you and you put the first small angel check into the company? What did you see? What did you think? What did you like? Where did you have concerns?
So I was running an e-commerce company then. So after leaving Excel, I started Urban Touch, and I was in Gurgaon at that time. And I was looking for interesting people to hire. And somebody recommended me Mohit. He was also with Bain, and he was also from IIT Kanpur. So I met him. He said, "I came to meet you politely, but I'm starting something." And we ended up speaking about it. And I said, "Look, logistics is a big challenge for e-commerce companies. Horizontal commerce companies can build logistics. So we want a third-party vendor to do it for us." And then they started working on it. And I then wrote to a lot of investors. At that time, I was known to be the guy who found Flipkart. Right. So I wrote to a lot of people recommending them heavily, but nobody agreed to invest money. So eventually I just told them that I'll put in money and maybe that will build conviction for others. But eventually nobody else came. And then I ended up in. So
amazing. You are officially known as the guy who found Flipkart. 2008 to 10, working in Excel.
Right.
First days of the sort of India internet story. Maybe a couple of minutes on that. Like, what was that like? The decision to move into venture at that in that era, and then leading into this Flipkart, the first check into the company, Sachin and Binny. Love to hear a little bit more there.
So I didn't plan. I never knew what VC was at that stage. In 2007, I was a CTO of a small group, and I left to start something. And a couple of my friends were funded by Erasmic then. It was not Excel then.
Right.
And they recommended me to meet them to sort of refine my idea, and then maybe they will even fund. During the conversation, they said that, look, we are looking for somebody with internet experience, and I had worked with Amazon and Yahoo. So they said that, why don't you come and eventually join? So it was started as a serendipity. They were not looking to hire. The fund was fully deployed. It was a $10 million fund. It was largely deployed. And after I joined, it became Excel. And I met Flipkart. They were also ex-Amazon. So I had heard that somebody from Amazon has started Flipkart, and they were sort of insane reviews on the market. At that time, every party you go to, people talk about Flipkart. So I knew that they were doing something incredible, and I had worked for Amazon, so I knew commerce becomes large. I ended up meeting them at a informal event. There was a event called Open Coffee Club, which was like 20-30 people used to show up every Saturday and talk about startups. So I met them there. Then so it took a while before we crossed the line. It took us almost 9 to 10 months before we decided to invest. And eventually I kept pushing and nobody bought it. So I eventually told them that I will put in personal money. And I went back to Excel to took approval that because we had like discussed it 6-7 times, you're not investing, so I might as well put in some personal money. Then they said, look, if you're going to put personal money, then we might as well do it from the fund. And that is a story. There's a book called Big Billion Startup, which actually talks about this. And this is what exactly happened in delivery. When I told everybody that you should invest and nobody did, I tried that stunt again. Then maybe if I commit, then maybe somebody will invest. But luckily for me, I think nobody invested. I could buy some stock in delivery.
So I guess the word to the wise is that when Abhishek says he should invest in something, people should listen, whether you are a fund manager or your other angels in the market.
Hopefully.
No, that's incredible. I think and what a journey, right? 2008 to 10 in venture capital. Before that, being in Amazon to Tracxn, which is today a huge success. It's just I have to congratulate you on the success. Then. And you're also a very active angel investor, and that's a good sort of segue into talking about sort of the First Cheque Report. When you very graciously complimented the team and the initiative, that there were many insights in the report that you were not expecting, and that for even us at Jungle and for maybe some of the people who might listen to this will probably want to know more about, because you are the data provider. This is all built on information that's come from your tent. So like, what were those and what were the surprise elements? Let's start with that.
So two things really stood out, which a lot of things were expected. Two founders was expected. Sachin, when you were starting as two founders,
right.
Two guys are two founders. So that was sort of expected. Most unexpected for me was educational background. So I always thought Indian story was always about people returning from US in India, starting in India, brought some idea from the West, and they dominate the market share. But the data said that a lot of homegrown talent is getting as much resources. So that was very India's story started as Inmobi, Naveen Tiwari returning from US, finished at Harvard MBA, and then started in India. So that always was a narrative. So it was good to see that it's a balanced, relatively balanced. A lot of homegrown talent get resources as well as a lot of international talent. Second was female founders getting good or sort of high commitment from that seed stage. That was again there was always a narrative that female founders find it harder to raise money.
Yeah.
But it was very welcoming change to see that the quantum is larger than the average. So that was another big surprise for me, and good to see that happen.
Yeah. And like, on that second point that you made, I mean, you and Neha started this company. The numbers on, female founders when you started the business versus today are drastically different. We're still only at, early teens in terms of percentages. What has been like, I guess, any insights to share on the journey of having a female like, why is it that A, the representation is so low, and B, the perception was opposite of what the data is telling us?
Correct.
And actually, like, I would be curious to hear your thoughts on also why is it that today the data says that the numbers are higher? Does an investor get a certain additional amount of confidence on a particular area? It just seems more balanced. I've been thinking about that since we reached this insight, but I haven't been able to fully unpack it.
So my sort of first-hand experience, as well as what I probably think is, women they put a lot of thought before they decide to jump into something. So they end up doing a lot more research. Neha told me, so actually Tracxn was sort of Neha's brainchild. She thought about this idea first. And we resonated a lot. I showed a lot of tools that I had built, but she first came and told that maybe we can build a platform for private markets. From there to pulling a trigger took almost 2 to 3 years. So I feel that maybe it's specific to Neha, but maybe more generally for females, is that they end up spending a lot more research before they jump into it. So they're slightly more sure about what they're doing before they enter, and that translate into fundraise. So the idea is more baked. There's a lot more research that has been done. They won't wake up one day and say, "Okay, let's do this." So that I've seen as probably one of the causes. Um, Secondly, I think there is a period in early days between 22 to maybe 26 when relatively males are more like lesser baggage in life. They can just try something. But in females, there's a little bit of pressure of getting married and all of that. So because of which they have to be more thoughtful about what they are doing.
Interesting.
So because of these two, I think there is when they are jumping in, they are relatively more sure.
So they're less impulsive, more sure about decisions they're making, and as a result, that translates into a certain work ethic and regimen that bodes really well for building out the foundation of a business.
Absolutely.
And do you think that the investor community appreciates that today, and that's why we're seeing some of these numbers to be higher than anticipated? I mean, the fact that this was an interesting insight, or is it like?
I don't think it's a. What should I say? I don't think investors think that because there's a female founder, they'll be more thought through.
Yeah.
I think investors I've seen are relatively more commercial in nature.
Right.
They look ideas on merit and execution, and I think that's what they are doing on. I don't see a positive bias there.
Okay.
In India, at least, I've seen a very neutral view. They don't consider being a female founder a factor. I've seen usually there is a lot of conversation around idea, TAM, execution, more than everything else.
Yeah.
So it's mostly merit driven rather than a what should I say, feedback loop that has gone back to investors. Yes, yeah.
Right. Understood. And as you built out the business, have there been particular areas that, as a result of some of the attributes that you talked about, that naturally Neha veered towards and you veered towards, and like maybe a couple of examples there would be interesting?
No, absolutely. I think first one is what I covered, that 2010 to 13 was a lot of every month there will be one or two conversations where there will be more validation on the idea. So she probably studied all large companies. She studied Bloomberg, Gartner, Capital IQ, all of these companies before deciding that there is a business to be built. So that was definitely a phase. I'm sure I would not have done so much work. I could cross the line much earlier. Second was, I think during our entire 10, 11 years, there have been very few cases where we have rolled out something and rolled back. I think it also comes because in every conversation, she would keep asking those questions, research on that, and then come back. So there's not a fail fast culture. You be a little bit thought through before you execute something. So that continues to remain a core part of our DNA.
Nice.
And the other thing that I think was a positive change in the company was, and from very early, the culture was very respectful. Because she's in every conference room. People can't use fast or loose language in front of her. So there is always more respectful, more thought through conversation in the conference room. So that really defined the culture of our company. And
very nice.
Even today, like, people come and always tell me there is a lot of warmth and there is a lot of politeness, respect in the company. That really sort of got driven by her personality.
Amazing. Great. And then maybe switching to the second point that you highlighted, which is around founder backgrounds. To me, yes, of course, there are these big stories that have been sort of hallmark moments in the ecosystem where America return or foreign return founders have come back to build something that they saw at scale in another market. But then there was also this big bias around, educational pedigree, specifically the IIT IIM communities and fraternities starting companies, and a lot more capital going towards it. What we tried to do in the report, and we couldn't map this out fully, was to look at how that cohort was 5 years ago and 10 years ago versus today. It's still 20+% in India today. But that, foreign return nuance, I think is starting to change, and it's refreshing to see that, right?
Absolutely. So I think for me, both cases were pleasant surprise. So I thought market share of top schools will be higher. It's actually good to see that capital diversification is a lot more across categories. I was expecting higher share for American return founders, but that was good to see. I was also pleasantly surprised by the experience diversity. So there is always narrative around people saying that, oh, you should back founders who have worked in startups more than people who work in large corporates. So it's good to see that balanced experience was valued more eventually. I had worked at Amazon and Yahoo, so I always thought that experience really helped me build organization, build culture. And but there was always a narrative that you should back founders who have worked in startups. So it is good to see that data says otherwise. And I do feel that founders who have spent 1 or 2 years in large companies, they bring a lot of knowledge base on how large companies eventually work, function. and that helps you build a good organization.
And as you look at a lot of these early stage angel deals that you do in the market, how much bias and how much heed do you pay to that particular part in terms of having worked in a large company versus worked in a startup versus actually having created a startup before? Is there any ranking there, or is it more nuanced based on the industry and problem they're trying to solve?
So at least for me personally, if somebody has started before, there is a slight positive bias because I feel that they've gone through one cycle where they've seen that a great idea, well accepted, eventually quickly fails.
Yeah.
So they are more thoughtful when they are picking direction next time. And so there's definitely a bias for that. And for startups, obviously, there is more positive. And personally, there is always a positive bias towards people who worked in startup than MNCs. But it's good to see data says otherwise.
Yeah.
Because they have seen startup culture, so they don't get bogged down by when things get hard.
The chaos and ambiguity and, yeah.
So like MNC experience is really valued when you're building in a similar market. So if you worked in a large cybersecurity startup and you're creating a cybersecurity company, that's really helpful. I always thought so, but I think you should ignore all these biases and just focus on the idea.
Yeah. I think that's at least, if I can jump in there, I think that's the little bit of maturity in the market, right? Where, you're underwriting an educational background or a stamp in terms of what, the education institution you've been a part of, to now being a little bit more meritocratic, right? And saying, okay, this is the problem. What is the sort of unique right to win? And how is this founder or founding team better inclined to go and do it? And so on that, if you had to choose, this is a generic one, I'm putting you on the spot, but if you had to choose someone who spent 20 years in corporate and going and starting a company in that domain, so deep domain, second-time founder who's starting out in a completely different market, what would you choose and why?
It's a very situation specific. I wouldn't say there's a rule of thumb.
Yeah.
I would commercially think which team is more likely to succeed.
Yeah.
In different cases, I'd look at different things. If they're coming from MNCs, they've done this work in past, I would look at how much hustle they can put in.
Right.
Or will they get scared very quickly
with
how incredibly hard early days are. If they're second-time founders, I would look at how thoughtful they are, or they're just really running around quickly. And I would also cover a little bit of how much work they can spend on org. So in different cases, I would look at different things. And in different markets, I might end up with different answers. So I would always go back to first principle and say that which company is likely to succeed more. I don't think a framework really helps. I'll give you a personal example. Naveen Tiwari started in Mobi, so it was all like US return. Then Flipkart came, India boys, very young, 22, 23-year-old.
Yeah.
2 founders. Delivery is 5 founder.
Yeah.
So it broke another narrative. Then Freshwork came.
Right.
Right. Person who's worked in a similar startup in the same domain. No particular strong background. And they've all done well.
Yeah.
So I think every time there is a success story, some
shackles are broken. And I think, on that particular topic, I was reading this morning about Zepto's latest fundraise. And when I was thinking about our discussion today, I realized that Zepto's raised more money this year than there was entire capital that went into seed stage, in this part of the world. So again, broken shackles, the founders don't have, the experience.
I think, this industry really humbles you. So every time you think you learned something, somebody would come and break all those patterns.
But that's the beauty about it, right? That's what keeps it so exciting. And that democracy and meritocracy is like, it's powerful, I feel.
Yeah, absolutely.
I think there was, for me, there was one particular part of the report that was very, very interesting. And this was a little bit about where these new companies are being built, right? In India, you've seen, Bangalore and Gurgaon being kind of the biggest startup hubs. On the Southeast Asia side, we've seen, Indonesia being sort of the biggest market. And then obviously a lot of these companies are getting incorporated in Singapore, but they're regional businesses. And what we've learned from here is just really how the next wave of cities or countries, in the case of Southeast Asia, we've seen almost 30% of seed activity the last year or so coming outside of Indonesia, right? So that's Vietnam, Malaysia, Philippines, Thailand. And in India today, I think Delhi, NCR and Bangalore are also, sub 50% of all the capital that's going. And that to me was very interesting. And I thought it'd be interesting to get your perspective. You look at a lot of deal flow at early stages. What is the mix shift you are seeing in terms of founders from let's say the tier 2s and 3s, the Kochis, the Jaipurs, the other Ahmedabad. Some people will call that tier 1, but let's just say Delhi, NCR, Mumbai, and Bangalore. If you leave those aside, what percentage are you seeing in terms of deals that come across your desk, and any nuances on the founders that you're picking up?
So, in my head, I think venture-backed ecosystem is a new playbook of creating companies.
Yeah.
If you look at slightly back in time, either companies are promoted. So if you're a large business house, you promote a company, hire management, you probably own 100%. You use some of your assets to put money into it, raise debt,
right?
And then you create a company.
Yeah.
Or there are family businesses where family member would start, grandfather will start, father will take it further, and kid, like grandson will come and scale it, right? And then private equity firm will come and then they will take it public. So these are the two playbooks. And venture is a new playbook. It practically came in 80s, where you can give money to somebody who has no background but has some expertise in building a company. And you almost become a co-founder. And you influence the strategy to a degree. Instead of owning 80% of the company, you only own 20% of the company. Which is a founder model instead of promoter model.
Sure.
That idea took almost 30 years to come to India. So what started in 80s there, probably in 2010, 15 is when Bangalore picked it up. And now it's traveling to next level of cities. So this whole playbook is getting passed on through cities over decades. And in every ecosystem, once you get a poster boy, then it really flourishes quickly. So in Bangalore, it came, but it was slow until Flipkart came and it became mainstream. In 2008 to 10, every conversation with a startup, which also includes a consulting on saying that why should you raise money and why should you not bootstrap it? No, that is no more a question now.
Sure.
Similarly, over time, I think these tier 2, tier 3 cities are also getting one or two poster boys, like Jaipur got Kar Dekho. After which that will become a mainstream playbook there. So these ideas will propagate slowly, and then once you get a success story, it will become the mainstream. And that is what we are seeing now. Although my personal deal flow, I see a lot more still Bombay, Delhi, Bangalore as the main thing. Maybe 80% of deal flow investments that gets done in those geographies.
Yeah.
But now I do see good stories coming out of next level cities where there are founders who are thinking big, who are thinking venture scale, and building a professionally run setup. So that is, I'm starting to see it in last.
And do you think there's there's when I thought about it, there were two elements, right? One is that, like you said, access to capital is largely in these markets. All the larger funds, maybe the most prolific angels, might have networks and access to some of the other geographies, but are primarily based in these ecosystems. So is it really harder for a founder? The data is starting to tell otherwise, which is very refreshing. Also, I think the data also assumes that 60+ % of capital that goes at seed is domestic capital, and a big part of that is driven by a group of a total, I think it was 15 or 16,000 angel investors, right? And I thought that was very interesting and obviously very different for Southeast Asia. On the Southeast Asia side, you're seeing lesser on the angel activity side, but more micro VC funds that are regional in nature, corporate setting up, venture arms, investing arms. But from an access to capital perspective, do you think that there is any disadvantage to being in some of these smaller towns, despite the data telling us otherwise?
No, I would imagine it's easier to raise money in Bangalore.
Yeah.
But I'll tell you, Bangalore 15 years back, there was practically no angel investment.
Right.
People didn't understand the playbook, so people would take disproportionate dilution on founders in the first round.
Yeah.
In 2004, somebody asked me for 50% for 25 lakh investment. So I've seen those days first time. Eventually, they realized that it doesn't work, right? So that playbook is still getting propagated. I would imagine it's easier to raise money here because people have seen wealth creation through angel investing. Secondly, people who have created successful startups are now investing. I would imagine it's harder to raise money in tier 2. But I do meet people. I come from Jodhpur. I have seen people, they are now inquiring me about, there's a company being started. Can we put in money? How much dilution should I take? So because they have seen, they are now learning that playbook. I do feel that founders in these cities are more diluted in earlier rounds right now. But over time, they will learn the balance between dilution versus what it takes for long-term success.
And on the flip side, if you think about the company building journey, right? Access to good quality talent, cost of talent, is that a kind of a little bit of an arbitrage there, or like?
In short run, I feel it's still easier to build a company here.
Yeah.
In larger cities. But my sense is that playbook will start getting propagated soon. And once you have one role model there. Like Car Dekho is in Jaipur. So now it's almost as good as building a company because they can copy a lot of things and not make new mistakes. And the problem with starting a new company in a new city where there's no playbook is that you'll make a lot of mistakes for the first time.
Yeah.
And I think it's good to see those happening in front of you. And then, so my sense is that it is going to be hard to build a company until you get a big story out of it, and then people just copy it. And it becomes,
I think as we do more of these types of conversations, one would be very interesting is to find one of those, let's say, poster childs that's come out of a Delhi, Bombay, Bangalore, and unpack that journey a little to see what were the pros and cons and why some of those decisions were made the way they were in terms of setting up teams and scaling them. The fun and lighter part of the report, and in some way, there was another compliment in there to you guys, because one of our founders, when we asked him, what would you build in your next life? He said, I would build a Tracxn for real estate. And we were like, wow, that's funny, because we've actually partnered with Tracxn to do this. And then he started talking, he was talking about all the information asymmetry and the challenging at getting data and how you guys have so beautifully solved that problem. So it's a testament to what you've done. But you had an interesting one that we put on there as well. And I thought it'd be great to spend a few minutes on that with you. Like, where does that come from? Help us think through a little bit on the consumer insight or nuances or some of the changes in the industry structure that led you to think that.
So for me, that became the juiciest part of the report. If I'm a first-time founder, that's like a gold mine.
Yeah.
And I started recently observing that there's a trend of building Zudio for different categories in India. In my head, the underlying trend is instead of going to a very local store, a lot of like Bharat or Middle India is looking to go to AC shops.
Yeah.
And their payability is slightly increased. If they were buying a 300 rupee shirt from, let's say, Palika Bazaar or Fashion Street in Bombay, they are okay to pay 400, 500 for that. But they are going to buy it in Zudio, where there's a lot more it's a lot more posh, a lot more convenient.
It's more organized, it's a little more structured, there's good support.
Shopping experience. That didn't exist 20 years back. When we graduated, people were trying to save every penny that they could. Right? So the mindset would be that they go to the even further shop, but they will want to buy it cheapest. Now that shift has happened. People want to have an experience while shopping. And they have found the sweet spot of pricing. So if you take it to 800 rupee, then the market shrinks. Then the gap is too high for people to choose experience. But if the price gap is slight, then people are moving. So you can build a Zudio-like category in fashion. You can build it in beauty. For example, actually Zudio has themselves launched Mishbu, which where you sell nail polish for 49 rupee, lipstick for 99. And eventually you need to innovate a little bit in supply chain and production to reach there. But you can essentially deliver that. And if you're delivering 99 or 49 rupee nail polish, you can create a Zudio-like experience there. You can do it in toys. Toys are incredibly expensive. Puzzle would be like 800 rupee. In my head, that should be sold for 200. That is a Zudio price point. So if you go backwards in almost every category, there is a new category to be created. And I think, unfortunately or fortunately, Zudio themselves are innovating in most of these categories. So they have themselves launched beauty, and I'm sure they'll launch a lot of categories.
And is there a particular, I mean, you mentioned toys, but were there any others that you think that Zudio actually won't be able to solve, and why? And therefore, it's a more of an opportunity for a young startup to kind of go after it?
I think toys for me is most broken. And also because there is a temporary regulatory gap. So India has banned a lot of, they put a new regulation around compliance, because of which a lot of factories has to be certified. So imports have been hampered in short term. So there's an opportunity to create local production in the brand. But I think as a startup founder, I would say that you should not worry about what large companies are doing. You will find your niche. You will find your insight, because of which you can build a category. Today, if you want to even start a Zudio for clothes, you should give it a shot. Maybe you'll find a category which Zudio doesn't serve. So, but there are a lot of categories. Every category where you feel that it's very overly priced, I think you should look at it. I think we have 2 small kids now. So when I buy toys, I figure out that it's a piece of wood carved. It cannot cost them so much. So in every category, I feel that, at least in toys, I feel that in almost sub-segment, I can feel there is a innovation to be done.
I was going to say, like, is this coming from the fact that you're a repeat buyer in that category with 2 little kids, and you realize that the lifespan of the product and the churn on the product is so high with the kids that there's probably something to be done there, right?
Absolutely, they break very quickly. And we are a parent who doesn't give screen to our kids, so it's incredibly hard to sort of manage them at times when they're not happy. Especially when sending them to schools. At least once a week, I have to give them some surprise to sending to school. and I feel that there has to be a big disruption there.
Yeah, no, I think we particularly enjoyed that section. We've got a lot of really good feedback from the market about that as well, because all the founders that we spoke to, including yourself, are very, very well accomplished founders, and they're talking about kind of sort of what they would do and how they would think about going back to -1 or 0. So hopefully we can sort of build on that section the next year. But yeah, I just want to thank you again for doing this with us. I think it was an incredible partnership. Hopefully we can continue it, and also for making time to do this session. We'll put this out on a few of the audio and video channels, and hope we can all share it within our networks.
It was absolutely pleasure. I will ask you a question before we close.
Yes.
What was the one thing that surprised you most personally from an insight perspective?
I think the biggest one for me was just on how a second time founder like that, for that, I think, at First Cheque, that has been a core thinking for us.
Okay.
Is that we want to back founders who've been there, done that. They might have built a business before, maybe not in the same category, but you're kind of taking the execution risk off the table, right? That's sort of one way to think about it. But it was very encouraging to see that the market is already maturing to a point where 40+% across the two markets, founders who are raising capital successfully, median round sizes going from 750K to 1.2 million, have been through that 0 to 1 journey before. Success or no success, that's a separate issue. But I think that is just a massive evolution and maturity of the market. And I think that stood out, and a lot more out there than maybe we are seeing. And so we need to do more.
Yeah, absolutely.
But that definitely stood out. And yeah, I hope that, on that female representation, I think while we are cheering a little bit about the fact that the numbers, improved and come a long way, I think we're still only scratching the surface, and there's a long way to go, which is why I was particularly keen to hear from you, because you have a female co-founder in Tracxn and you look at so much deal flow. So I think those two were the big highlights for us. But it'll be interesting to track this data kind of year on year and see how it evolves.
Got it. Awesome. It was an absolute pleasure.
Yes. Thank you so much.
Thank you.
It's fun. Thank you.